All right. All right. Enough of the music in the hair. Let's talk about what we're supposed to be talking about for a minute, at least.
All right, well, it's got a lot here. I think we talked a lot about covered calls the last time. In fact, the last two times we've been involved in these Thursday noon extravaganzas. What did we miss out on? Is there something? Do you want to review that? How do you want to handle it?
And let's talk. Let's ask the crowd here. Like, did we cover everything about the covered call? Because when we quit talking about that, is because we were over our 30-minute time slot, but we still had some unanswered questions. So I'd like to go back and visit that covered call thing if anybody on here has any questions. Yeah, drop them.
Dan's all good on covered calls. He's all good on it. Mostly haircut comments, but drop your covered call questions here in the chat. That's you, or that's David helping us out here. And
all right, cool. I'll give you a couple of stocks you might want to look at. The DVN, Devon Energy. And FTNT. Now, Devon is good because, as we talked before about beta, and I don't know why it is. This is just an oil company that trades around $50 a share. So you could get 100 shares for $2,500 if you bought it on margin. And it's just got great covered calls. It also has a good dividend. Yeah. Bob says you said the stock selected should pay a dividend, and Google doesn't. And that's true, Bob. For the most part, for example, in my Freedom portfolio, they all pay a dividend. But Google checks all the boxes as the perfect covered call stock. Because of the way it trades, its beta, the way it delivers news, its price, just everything about it makes for a fantastic covered call stock, even though it doesn't pay a dividend. And Apple is another good one. A little expensive, though, for some people. Then again, PLTR, we talked about that one. That one went up and then it went way down. But that's a real cheap, highly volatile stock with a beta over 2, but it's pretty good. And Cindy says, should strikes be 7 to 10% above current market value? Yes, they should. And you would buy that back only in the case where you would risk have the stock called away at a price that's below your cost basis. Otherwise, don't buy the stock back. Just let yourself get called out.
I bought FTNT stock before it dropped, so my cost basis was higher than covered call strike. Is that right?
Yeah, that could be right. Yeah, that's right, Cindy. Yeah, Tim just bought some PLTR today. Where is PLTR? Where's it trading at right now? I'm long that one too. Yeah, Cindy, I think you're getting this. And then later today, I'm going to have another class at 2, just on covered calls, and we're going to add a few more stocks to the program we're doing with Google. So FTNT was okay. PLTR, I don't know where that's at. Oh, right there, 1503, Cindy says. Okay, so that's good. And with today's interest rates, does it pay to do covered calls on margins? Absolutely. As Mervyn Pearson asks, with today's high interest rates, you still can't get a good rate on interest at a bank or anything. I mean, I buy a lot of T-bills, and I'm at about 4.26% on those. I'm sorry, 5.26% on those, and that's for a year. With a credit spread, I can get 5% in 3 days. So the interest rates don't matter to me. They can go as high as they want. I'm still going to make more money with a covered call or a credit spread or a naked put than you would parking your money in any CD. I just buy the T-bills because I got a lot of everything I already want. And when the T-bills are paying, 5%, and a long bond gets paid up to 5%, that's going to suck a lot of money out of the stock market. If you can get, 5%, they call that the risk-free rate of money, whatever a T-bill is at. So that's kind of high right.
Can you still deposit T bills with some of these firms and bonds and use that as collateral against?
Yeah. Yeah.
Yeah, and that's
The
really
best
the way to do
collateral
it.
in the world. It's the best collateral in the world. I mean,
That's the way to do it. This way, you're not giving up your cash, and you're still making whatever the interest is on the note. Donna has asked here. I don't want that to slip away. She asked if you could state the buyback rule again.
Yeah. Yeah. Okay. I'll make it real easy. Let's say the stock is at 50 and your cost basis on the stock is at 60. So the stock is $10 below your cost basis. So if you sold a 55 strike price and your cost basis is 60 and the stock is at 50, you sell it at 55. And if you don't get called out, you've lowered your cost basis and you keep the stock. But you would buy back the 55 call you sold before expiration so you don't get called out at 55 when you own the stock at 60. Does that make sense, Donna? The only time you buy back the option you sold is if it's at a strike price that's below your cost basis, in which case you would buy that back close to expiration date. Otherwise, if you sold a strike price higher than your purchase price or your cost basis, I just let myself get called out. I never buy that option back and roll it out. I don't do that.
Okay, she seems to understand that totally.
All right. Robinson has a good question. He says, when we get an alert for a spread and it goes up before we can get in, when would you still try to do the spread, and how much would it go up for a trade? Well, what I would do, and I do this myself, people don't understand it, but on Tuesday, I put the trade out, the trade that I did, and I give that to the people. And a lot of times it's still at that price. And if the stock has moved up, you have to raise your strike prices. That's all you can do.
Right.
And what people don't see is sometimes the struggle I go through trying to get filled. Like Tuesday, I got a credit spread on AVGO that expires tomorrow. And it took me 45 minutes to try to get filled. So I'm looking at the two options, and I'm going to sell the 810 strike price put, and I'm going to buy the 805. I'm going to get more for the 810 selling that than I spend on the 805, and the difference is my credit, my net credit. So I'm looking at these two options, and on Schwab, what I love about it is it doesn't matter the two options prices that they get executed at. All that matters is, did you get the net credit you want? So you can enter the order with just a limit on the net credit and no regard to the price of the individual options get executed at. So I'm looking at these, and it's showing a straight up 30-cent net credit. There's plenty of room between these options. So I put my order in there with a limit on the net credit of 30 cents. Half hour goes by, I don't get filled. I click on the tab to change it. I can ask for less net credit. It's still sitting there right at 30, and I'm not getting filled, right? And this just goes on and on and on. Then I cancel the order. I'm going to change my strikes. Then the stock wiggles a little bit. I put the order back in at the exact same price, and bam, I get executed. So I have to raise my strike prices too, Robinson. If the stock goes up while I'm trying to get filled, I just raise it. And it really doesn't matter to me how much I got to raise it. I want to get into the trade, right? I don't want to not get into the trade. And preferably, I've still given myself enough room. Where is AVGO right now? I'm short the 810 put and long the 805 put. So type in the price if anybody can see it. I don't even have my trading thing up here. But anyway, somebody did.
Do you ever go to the market, Jack? You ever go to the market? It's always limit orders to get your combination right.
You get screwed at the market. Now, I'll buy a call at the market if the difference between the bid and ask is small. But a lot of times they're wide, and then I put it on a limit. But look at this AVGO. So it's $917.90 or something like that. And I'm short the 810 put. Now, what are the odds that this thing someone's going to put the stock to me at 810 when it's trading at 917? You see, This is why I love being able to get so far out of the money. It'd be unbelievable if I lost on this trade, right? So if I got to raise my strike price up a little bit to get filled, I'm going to do it, right? Mm-hmm. Yeah. So John says, why is there a difficulty getting filled? I thought market makers were supposed to step in and facilitate trades. You're exactly right, John. And if I did that at the market, they would have to step in and facilitate that trade. But because I'm on a limit order, they don't have to do that, even if the market shows that it could be filled right there, right? Because what I'm trying to do is on that 810 put, I'm selling that between the bid and the ask. And on the 805, I'm buying that between the bid and the ask. So they don't have to fill me if I'm on a limit, and I'm just going in on a limit on a net credit. So it's like one person took the whole other side of that trade. Yeah. So that's that. PLTR, nothing special about PLTR, Doug. The only thing that's special about it is I get asked all the time for a stock that somebody could do a naked put or a covered call or even a credit spread. You know, credit spread, it doesn't matter the price of the stock, but the other two do. So people are always asking me for a low priced covered call stock. And a lot of them don't have enough beta, you know, enough volatility to make the options good. So the only thing special about PLTR is that it's volatile. That's it. So if you want a low price stock that you can sell covered calls on and naked puts and stuff like that, that's low price and volatile enough to have juicy options, PLT is it. I own PLTR. I don't really know what they do, something in AI. I don't care what it is. I'm just, I'm speculating on that. So Jim has, maybe my puts are even lower. Maybe my put is 790, 785. I got a lot of spreads on AVGO. But just imagine having a 790 put and long, you're short and you're long to 785 and the stock's at $917. You can go fishing all day long, right? Yeah, PLTR got a downgrade. I saw that. It doesn't mean anything to me. Yeah, they're trying to do AI government contracts. PLTR is. Again, I'm not recommending the stock. I just got it because I like that volatility.
Well, I mean, also, if Dean can state the fact that it's been downgraded, it's already in the price.
Yeah, it's already in there. So Valerie says, how do I buy T-bills? You can buy those from treasurydirect.gov, or you can buy them through your broker. Any broker has. If you just click on products and click on fixed income, then you'll see T-bills. I could do a whole class on T-bills because you have to buy them before they're actually issued, right? So you buy it the day before the auction, and then they fill your order, and then you see your fill, and it's awesome. And like at Schwab, if you're doing T-bills, it's just going to automatically reinvest it. If you want to buy the 4-week, for example, 4 weeks go by, that bill matures, you get all the interest, and it automatically reinvests it. Wow. RV Hannings, killing it on AVGO, made $7,000 on a nice spread. Sold the 870 put and bought the 860 put, made $7,000. Way to go, RV Hannings.
What do you have, a 10 lot on that?
I don't know. Must have been something nice. That's $7,000 in 1 week. That's pretty sweet. Yeah, Peter Mounts is saying he killed it now too. Yeah, $1,800 Peter Mounts made on that. A lot of money people made. I tell you, people say, "Oh, Jack makes money." I don't make money. I take money. Right? When we're looking at these spreads, we set these up, and we're just taking whatever credit we could get. Naked put too. I'm just taking the money. You look at that options chain, and you can see how much they're willing to pay for whatever option it is you want to sell. So that's good. Yeah, Robinson, the credit is the whole thing. Like back in the day when you were doing a credit spread, years ago, I had a fund that only did this, and we would have to wait until the third Friday of the month to do it. But the way you used to do it was, let's say you're doing this AVGO. You would sell the 810 put, and then you would wait to get filled, and that would be a naked put. So the margin would be all screwed up on that. This is back in the 90s. You do a naked put at 810, and then once you get filled, then you have to go buy that 805 at a price that's going to give you that net credit. That was a pain in the butt. You had to log in, you had to leg into two separate trades. Now with Schwab, the beautiful thing is you just put a limit on that net credit and you leave that set in there and you don't have to worry about the individual prices.
Yeah, you'll let the ends meet the parameters.
Yeah, good stuff. Yeah, Cindy, you're going to get this. I'm going to make sure you're an expert on these covered calls.
Something called walk limit credit in Schwab. Do you use
Walk
that in
limit
Schwab?
credit? No, I've never seen it. I never used the walk limit credit. Tim says I vote for a T-bill session. Yeah, we could do that. It's unbelievably difficult the first time you do it because it makes no sense. But after you've bought a T-bill once, it's a piece of cake. Yeah, Dan says it's like being in a toll booth. Yeah, I just take the toll every week. How low of a credit would you do to still do the trade? Robinson says. All right, now that's a good question. Some of these options, when we're doing these credit spreads, they are going to trade in a difference of $5. And that's $500 per contract then, right? Then sometimes you have them trade $1, right? That's pretty cool. And like even on Visa, sometimes they'll trade 50-cent increments in strike prices. So that's good. Now, when I was first teaching these credit spreads, Robinson, I was teaching it to experienced guys and some accredited investors, and they were loving 2% per week, right? And you look at that, that's 24% a month, and they're so far out of the money. They got such a high batting average because they're so far out of the money. So it's all personal. Some people want 2% a week. Some people want 3% a week. I think that's real high. Also, I personally like to shoot for 5% per week. I'm able to get that. So if the way you figure out your percentage is you just divide your net credit by the difference in strikes. So if you're getting 50 cents net credit and there's a $5 difference in strikes, then that's 10% on the money you used on that trade.
Mm-hmm.
Yeah.
While you're looking at some of these questions, I just want to suggest to people out there when, a lot of traders come to me and Jack, and they have a goal. Jack mentioned he likes to make 5% over the week. That's what he's shooting for. And that's important. In other words, it's a number that you're looking to approach. But in the end, all you have is your system, is your process, and sticking to that process. And when you don't make that goal, or you don't come close to that goal, usually it's because of one of those two factors. You've strayed off your plan. You paid a little bit more. You didn't allow the market to do what it's automatically give you the right combination, and you rushed into a trade. It's usually skipping your trading plan as it's written. And so, it's important to hold that out there. You do have the goal of making 4 or 5% in a week, but it really is important to realize that it all comes down to having a plan and sticking to it. And if you do have a good plan, then it really is a matter of making really as many trades as you can within the parameters to see that curve rise. So don't get too hung up on. You're not a failure if you lose 2% in a week. It just means that was one of those periods of time where you had where there were more losers than winners. But that's only a short period of time. Over the course of weeks and months, a good trading plan will take care of itself. So you just can't concern yourself day to day. You have to have that vision of what you want, and that should inspire you to stay on your plan. And what I like, and one of the reasons Jack and I decided to do this together is because the simplicity of what Jack does. It really, there are some concepts that you have to gather, but the movements that you make are relatively simple, and therefore it really is a matter of understanding when and where to make those moves, and so really you've got what you need, but don't be fixated on that goal as much as fixated on running your plan the way it's written.
That's a great thing, and also I just want to throw out the yield or the percent or the dollar amount you make. Everyone is happy with a different amount. What I found so funny in that presentation I gave to the accredited guys and some registered investment advisors was the registered investment advisors absolutely loved the 2% per week.
Mhm.
Loved it. And a lot of the accredited investors loved it also. And one old dude actually fell asleep. I wanted to take a wad of paper and toss it at him and hit it, bounce it off his head. That no one's ever fell asleep.
Mitch McConnell was there. You said?
Dude, I'm telling you, you gotta go easy on me with
But
that.
Dianne Feinstein, I got to go both ways, you know. Yeah.
Well, yeah, okay. And then I said something about 3% a week, and he perks up. He jumps up in his seat. 3% a week. He said that's more than the vig we charge on the loans down at the pastrami shop. You know?
Barber shop, back to the bar.
That got him going 3% a week. So it's all relative to what you want, and I like that 5%. I personally just think that's a sweet spot where you can make a lot of yield and not have to come very close to risking a loss, or having to unwind the trade. Like in the case of AVGO, I'm $100 out of the money now, so I love that. Now, a lot of guys with AVGO, they made 4 times what I made because they used strike prices that were closer to the price of the stock when they initiated the trade. So they've made 10, 12, 15, 20%, way more.
The premiums are going to be higher the closer you get to the actual price of it. I mean, the closer you get to at the money, the more you're going to rake in. But then again, any move higher could get you out of the trade a little bit quicker. So so there's always a question of should I sell 2 a little bit higher, or the one closer to the money, or that's a combination. That's another discussion we can have, but.
That really plays a point in naked puts, right? You're going to go way out of the money on a naked put if you don't want it. But if you want the stock, it's amazing how you can sell a naked put real close to the price of the stock, and the premium on those is huge. Mm-hmm. So, for example, if you sell a naked put and you bring in $3 on that, and you do have the stock assigned to you, your actual cost is the assignment price minus $3. So you could just right there turn around and sell it at the price you had it put to you and still make $3. Right. It's very hard to lose when you do naked puts the right way. Very easy to lose when you do naked puts the wrong way. Right? I guess that's true for everything.
It is, no question.
Yeah, Ed, this training sequence, we're going to do this every Thursday, the regular program. It's just called the Weekly Spread with Norman and Jack. Yeah, regular show. So, Norman, what do you think? I wanted to ask you this last week. What do you think stops somebody from pursuing a strategy that they want to do but don't do? Confidence, intelligence, they don't understand it. I mean, what would you fear? Tim says.
There's always a dilemma of with the kind of when you're taking middles like this, when you're taking safe middles as a lot of your processes do. There's a lot of safety in it, but most traders dream of the big trade. They want, and when they take the middle, and there was a big trade that happened, but they decided to take the safer, more consistent money, there's always maybe I should, I really missed out on that. That really would have been great. So you start, expanding that middle, or you escape the middle and start doing other things. But I think that what most traders don't realize is that most traders are losing most of the time, and that becomes kind of a habit. And even when they come to a new process, so they have a trust in somebody like you. They seed your record. They see others in the room that are having the same success. All of that can build to helping you be that consistent person that you want. You really need to surround yourself with people who are making money consistently. The problem with going for the home run all the time is that you got to learn to strike out too, and that striking out can really wear you down, so that you start missing the home runs that you're somehow setting yourself up for. I mean, professional traders, they do things like look for the middle. They look for not always the low-hanging fruit, because you can, expand that middle and so on. But what they do is they go for consistency. And to go for consistency, everything around you really should lend to that consistency. Small wins along the way, any losses being very small, especially compared to the wins. You start doing that more, and you're surrounding yourself with what I call a positive environment, and it becomes really proactive in an environment for you. So that so I think that when people make mistakes, they're following a dream that is available in the market, but doesn't have the consistency and the long-term process, long-term profitable nature that it does when you just take a smaller amount that is much more. It's much more possible as opposed to the less possible big move. So I think, and it's not about lowering the bar, because what happens is that when you start to develop the process that makes you money, then you can expand within that process. I mean, the person who made $7,000, I don't think he took a shot. I think that he just continued to work the process. And just like what is it they used to say? Compounding. Just like compounding is the way people get rich, not shot taking.
Right.
And really, that's a hard thing to do especially for people in stress, people who have high need. They want it all now, and it's hard to look to the future of consistency. So I think those are all the things that play into it.
Yeah, and you made a good point there. I don't take shots on a routine basis. I trade through routine and repetition, but every now and then, that type of trading that I do, people say it's boring, and it is boring. There's no emotion in it. But if you want some thrills and you want to take a shot, there's always opportunity. I just took the first shot I've taken in all year. Really wild, crazy shot. All right. I'll tell you what I did. So last week, NVIDIA was reporting earnings on Wednesday. One of my favorite tricks in the book is this should be illegal. I bought the stock.
Not while I'm taking a sip.
All right, sorry. All right, I'm gonna go through this kind of quick. So Rob, boring money, making money boring is the way it's at, Robinson. But sometimes you want to thrill, sometimes you want to see if you're smart, if you're right, if you're better than everybody. So you take a shot. But the cards, the stars, everything has to line up for me. So NVIDIA, last Wednesday, they're going to report earnings after the close. And I just got 100% feeling they're going to have blowout earnings. Now, I can tell you why I found that out in another story. So right before the market closes, and it's going to close at 4:00 Eastern, and at 4:20, NVIDIA is going to announce the earnings. So right before the market closed, I bought some NVIDIA at 468. Okay. Now what I'm going to, and I bought some call options. I bought some 470 strike price call options. Now the stock that I bought, I planned on selling that the moment the earnings got released at 4:20 in the aftermarket hours, in the aftermarket session. And I bought the call options right before the close. And I thought, I'm going to sell the stock in the after hours right when that number comes out. I'm going to sell the options in the morning. Well, I'm sitting there at 4:20. I'm waiting all this, and I'm looking in the after hours, and there's no market makers in the after hour session. It's just everybody cowboy style doing whatever they want. So I got my stock. I wait for the earnings. The earnings come out. The stock goes from like 480 to like 505, just faster than you can even watch it go. So I throw my shares out there at 505. Bang, I sold them. That's the biggest, fastest in 20 minutes. That's the biggest, fastest money I ever made. Close to it. I made some more on it in the first hour. But then the next day, I go to sell those 470 calls, and the stock in minutes had pulled back so much. I lost $500 on buying those calls. Right. Mm-hmm. So again, it just goes to show you, even when you can have it right on the options, it didn't work. But on the stock, thankfully, we have that after hours session. You can like at Schwab, Donna, you don't need any special permission at Schwab to trade it in the after hours session.
And you got the craziness out of your system.
You got the craziness out of your system, and then you can go brag to your friends what you did, and then they want to hear that. They don't want to hear the boring crap. You making 5% a week, only until they've lost all their money, they come back and go, Jack, how do you do that again with the 5%? then they're interested when they've blown up their account. But all they want to hear about is everybody bragging about big home runs.
You
But
know,
that
you know, I know Dave's. We're looking at the time, but I do want to say that a lot of successful traders who had previously been struggling have grabbed onto a particular concept that I suggest, and that is that frame everything you do in your trading like a business, and that when you make enough 5% weeks, you can take a little vacation. You can take a shot at NVIDIA if you want. You know, I consider that a vacation. I also think that, on the other hand, you need to treat profit money in a business. If you make profit, you got to turn some of that around to advertising and so on. And when you make profit, you've got to treat it as core money. You can't just flip it away and do something crazy because it's profit money and I can lose it. It's only profit. So the more serious you are about the profit, and the more you at least take 90% of that and leave it in the core so that you can start expanding your position sizing, that's the way to do it. Go ahead and take that 10% and go crazy with NVIDIA. But treat your trading as a business and frame it as a business. We even have meditations that talk about that, because I just think, you remember the late Joe Ross? Do you remember Joe? Joe wrote a book called Trading as a Business. Nobody has it because it's an oversized book, you know, and it doesn't fit on the shelf. You got to lay it down. But if anybody ever comes across that book, it's a terrific book on, he passed away just last year.
Yeah.
But trading as a business, great book.
You know, you can trade as a business. You just open up your account in the form of an LLC. That might cost you $50 to form an LLC. And then you fund that account, and everything, any education you buy, you can write it off. You got all these deductions when you trade as a business, you know, even putting your trading in a business, right? Just make up an LLC.
Yeah, I mean, that would, of course, be the next step as you start seeing some success in framing in your mind as business. Then you got a business. I mean, you should be able to write things off, and you should be able to treat it as a business. LLC, it flows through your, you know, to your personal account, and you know, but you can do things. Your feed, your computer costs, the electric in your room. There are certain deductions that you can then take, you know.
So Valerie says, you're my favorite boring trader. Laugh out loud. Taking money every week from the market is definitely not boring. I don't think it's boring either. The actual trade is kind of boring, but I love it. I get jacked up doing what I do. I don't ever stay in my lane. I do not get out of my lane. Every now and then I do, you know, a little wild, take a shot like I did with NVIDIA, but I'm a former NASDAQ market maker. I know exactly what is going to happen in very, very, very rare instances. You know, I don't always have the confidence that I had on that NVIDIA trade, but everybody and their brother that I was talking to, and everybody I heard from, every single CEO that does business with NVIDIA said one thing: we'll take all we can get. Mm-hmm. And they can't get enough, right there. So right there, when I hear, I think Musk said it, I think Cuban said it for some business he's got, you know, we'll take all the NVIDIA chips we can get, and we can't get enough, you know. So, well,
NVIDIA is the new leader in the AI question. So, you know, you can play with other stocks, but until NVIDIA is not number one, that's really where going to be where the action is. You'll have the volume, you'll have the movement, you got everything you need for options, you know.
Robinson says, I made 500 today on the spread. It was boring and I loved it. That's so funny. Hey, you guys are cracking me up with the boring is humor or boring is profitable. Yeah, it's boring and I love it. Yeah, I love it too. When I was back in the day, man, I wore myself out emotionally. We were constantly making good money and looking for big home runs, but it was almost like the thrill and the adrenaline of it was part of it. And when I got real serious about it, I took all the emotion out of it, and I put on these boring income trades, which I actually love more than the directional trade. And then every now and then, you know, I'll take a shot on something like NVIDIA. I love that. I love that after hours stuff on earnings. I just love that. That's like crazy.
David, you turned your camera on. Are you just trying to show people what youth looks like?
Well, listen, I don't want to interrupt, but we have gone 5 minutes over. Today was jam-packed. I know I say that every week, but this week, really, I couldn't keep up with the note-taking. I hope I got all the important stuff. Thank you, folks. There's a lot of questions. I'm going to save them for the next. We've already gone over by 5 minutes, so I'm going to save them for the next time. Maybe we'll just do a straight up Q&A session next time. And that's it. I'm going to go ahead and recap for the folks. Jack Norman, thank you so much for sharing with us today. Got a lot of great stuff. I'm going to have to go back through the recording just to do the write-up for this, because I definitely could not keep up this week.
I know I got going a little fast today, but I'm all jacked up about it. I love what's happening in the market.
We love it. We love it.
That $7,000 win it turned us on. I think
Peter Mouse, man, he's been killing it too. He's just hammering away on these things. And Tim, yeah, Dan, yeah, Valerie, yeah, good. It's so boring. We go over and over and over it, Valerie.
Yeah, we got to stop that. All right, Jack. See you guys.
All right, I got to jump.
Thank you, guys.
Go ahead.
All right. Ed says, consider 60 minutes. Yeah, I think maybe we're going to have to do a double length episode at some point, because these shows are definitely getting jam packed. All right. I'm going to do a little bit of recap here. As I said, I didn't keep up with the notes as well as I should have, because they were just on fire this week. But list of stocks you might want to look at. Get your pens ready. I'll give you to the count of 5 to get a pen and a piece of paper. 1, 2, 3, 4, 5. All right. And by the way, if you don't have your pen and paper, you can go ahead and listen to the recording. I'll drop the link for that in the chat. List of stocks you might want to look at that are great for covered calls. Devon Energy, DVN, he says, Jack says, has great covered calls and a good dividend. Fortinet, FTNT, Google, Goog. For that one, he particularly said that checks all the boxes as a perfect covered call stock. It's beta, which is the volatility of the stock, the way it trades, its price, and the news. Even though it doesn't pay a dividend, he considers it a perfect covered call stock. Another one is Apple, AAPL. Don't make the mistake a lot of people make when they do APPL. That's a different stock. It's AAPL that you want. Palantir, PLTR. That's a Peter Thiel stock. Company doing AI contracts with the government. Cheap, highly volatile stock with a beta over 2. Later on, let me see if I find it in my notes here. What was special about Palantir, PLTR? Nothing is special about Palantir except for the fact that people ask all the time about a good low price stock for covered calls or naked puts. And what's special about Palantir is that it's volatile enough to have juicy options. A lot of low price stocks don't have good beta or volatility. There was a question about, should the strikes be 7 to 10% over the current value? Yes, that's exactly correct. I believe that was Valerie that asked that question. And then Jack gave an example. If the stock is $50, your cost basis is $60. $10 below your cost basis, trading at $10 below your cost basis. If you sold a $55 strike price, don't get called out. You're low. Wow, these notes were a little scribbled here. Don't get called out. You lower your cost basis. If it will be lower than your cost basis, then you should buy back the covered call that you sold. In short, always get called, always have a bias towards getting called out unless you're going to lose on the deal. All right, I'll be sure to clear that up when I do the write-up on this. Bonds pay a lot. That sucks a lot of money out of the market. They talked a lot about T-bills. If you want to buy T-bills, you can go to your broker. Usually it's in the section titled Products, Fixed Income, or you can go to treasurydirect.gov. That's treasurydirect.gov. You can buy T-bills. Jack says he could do a whole class on T-bills, and I believe Tim voted for that. So we're going to see if we can have that for a future show. Using T-bills as collateral. You can get interest on the T-bill, avoid giving up your cash, and still use it as collateral. So it looks like a win, something that folks may want to do. Let's see. Then Jack went on to talk about sometimes he'll buy a covered call at the market if the bid-ask spread is small, but a lot of times they are not. And so that's why he uses limit orders most of the time. There was a question about limit order versus market order. Jack says market makers do not step in it unless it's a market order. When Jack does a limit order, they don't have to step in to fill his order. Jack says, I don't make money, I take money. I take whatever credit I can get. I look at the options chain and decide what money I want to take. Norman gave us a good long lecture on process. In the end, all you have is your process, have a plan and stick to it. If you have a good plan, the idea is to have as many trades as possible within that good plan, because in the end, the good plan will win over time. You can't concern yourself with a loss here and there. That's an important one. I know that has rattled me a lot in the past. I've taken a loss and I've taken a break, and then I've missed a lot of great trades. So as long as you are confident in your plan, stick to the plan and don't worry about individual losses. About yields that you make on the trade, Jack aims for 5%. He says it's a good sweet spot where you can make a lot of money and not come close to getting called out often. But there are some people that would be happier with even lower yields, 2% or even 3%. So as Norman recaps for us, premiums will be higher the closer you get to the money. So you could probably even get 10 or 12% if you get very close to the money, but then you have a higher chance of being called out. So just consider that when placing your sell orders, sell to open orders. Excuse me. Norman then went on to tell us what stops most people from getting started with a strategy they like and believe in. He says most traders dream of the big trade, but everything should lend itself to consistency, smaller, safer trades. Shift your mindset to smaller amount consistently over time. Compounding is how people get rich, not shot taking. And on that note, Jack said his trading is boring, and it should be boring. Once you get a consistent strategy that brings in income, you can take shots if you want. In fact, he just took his first big shot all year. And for anyone watching this in the future on a recording, it's August. So 8 months into the year, at the end of the month, so almost 9 months into the year, he's taking his first big shot of the year. That just goes to show you what a different mindset it is for an income trader. Small, consistent wins over time will make you rich. After our session has no market. Oh, so he went on to explain his big shot that he took on NVIDIA. The aftermarket session has no market makers. It's cowboy style. So he bought some NVIDIA before the market closed, and NVIDIA went on to report their earnings. He bought at 468. Immediately after the announcement, the stock went to 505. He sold the stock at a profit in the after hours, but the next morning when he went to sell the call options, he actually ended up losing $500 on the option. Pardon me, because the stock had dropped back down so quickly. So just goes to show that even when you have it right, you could get it wrong. Again, just hammering home that point about shift your mindset to income trading, get small, consistent wins, build your nest egg, and then with a very small portion of that nest egg, you can take shots if you want, get that excitement that some people look for when they're trading. But if you're looking to make money, to get rich, to build wealth, income is the way to go. And at the end, Norman told us about a book, Trading as a Business by Joe Ross. He says it's a huge book, so you're probably going to have to buy a new bookshelf if you get it. Probably hard to find. I think I looked it up and it might be out of print, but it's about framing everything you do in your trading like a business. Take your profit and treat it like real money, not house money. A lot of people think that, oh, because I won on this trade, now I can take some gambling on other trades. And if you think about it that way, you're going to end up in the poorhouse. So frame everything that you do in your trading like a business, and hopefully things work out for the best. That is all I have for my notes. Thank you, folks. I'm going to drop in the chat here. Give me one moment to find that link. Drop in the chat here where you can get all our past shows. And later today, probably within the next hour or two, I'll be dropping today's recording in there. So right now, if you go there, it's going to be, thank you, Valerie. She has excellent recap, very helpful. Cindy as well, thank you. If you go to that link I just dropped in the chat, should have it. jackcarter.com/the-weekly-spread. That's going to have the recordings of all our past shows. We've got 6 shows. Today's show will make 7. And that will be up a little bit later today. That's all for today, folks. Thank you. And I will see you next week. Remember to put us on your calendar every Thursday at noon Eastern time. Have a great day.